The secret to instant currency profit is called foreign exchange arbitrage. It's the ultimate risk-free money-making strategy in the global currency market. Foreign exchange arbitrage is defined as the simultaneous purchase and sale of a currency in different markets to exploit small differences in exchange rates. This practice allows for a guaranteed risk-free profit due to price inefficiencies. These opportunities are usually fleeting, vanishing in milliseconds as high-speed trading algorithms instantly correct the price discrepancies. The first and most common type is triangular arbitrage. This involves 3 different currencies and 3 sequential trades to lock in a profit. Imagine you have US dollars. You could convert your USD to euros at the EUR/USD rate, then convert the euros to British pounds at the EUR/GBP rate, and finally convert the British pounds back to US dollars at the GBP/USD rate. If the math on that final conversion yields more US dollars than you started with, you've performed a successful triangular arbitrage. The key is to find the small imbalance where the cross-rate calculation doesn't match the market. This is a crucial concept for understanding how to make money in Forex. The second major type is covered interest arbitrage. This strategy exploits the interest rate differential between 2 countries while using a forward contract to cover the currency risk. You borrow in a low-interest currency, convert it to a high-interest currency, invest the funds for a period, and simultaneously lock in a forward rate to convert the money back. This removes the uncertainty of future exchange rates, ensuring the return is solely based on the favorable interest rate difference. Successful arbitrage trading requires lightning-fast execution software to beat other traders. In essence, whether through triangular or covered interest methods, foreign exchange arbitrage capitalizes on market imperfections for a guaranteed gain. If you want to master this world of fast-paced currency trading, like and subscribe for more deep dives.